Hello, hello, hello. Welcome to another ES Futures trading stream. This is a recap and prep for today's trading. It is 12:10 a.m. in the. We still have more than 9 hours before the opening, but I wanted to do something. I am trying this new format to make a review of what happened in order to understand what's happening in the market. I don't know how long I'm going to do this, but let's do a test. If you like it, please just let me know. I have this stream. It's also updated and uploaded in YouTube under the name at ES Futures Trading as well. I guess you can leave comments over there if Twitch doesn't allow it. Commentaries or questions or whatever you feel interested in doing. The first thing, some really interesting good feature that this charting platform has, which is Windows Trader, is the replay. Features. I have set a replay of yesterday. This is yesterday before the opening. We were talking about how Friday gave us two distributions here. We had the upper distribution, the lower distribution, no excess in the high. This could be maybe the market getting too long, it being traveled from almost the opposite side of the range all the way to the opposite side of the range. Actually, it didn't break the low, this low, and then targeted the opposite side, which it did break. It did break an inside bar, a weekly inside bar, and a monthly as well. But it seems like it was just too fast, too far, too much here. It gave us it gave us a high that was made in the overnight. These are the most important. There was a more important thing, maybe for the future. I don't know if the market is going to come back to check these ones out, especially since it doesn't have excess here. The day has excess, but the intraday has not. We were talking about how important this distribution could be at the opening. Market taking this distribution from the overnight or closing this distribution, very subtle though, very subtle. Notice where this low was, right at April high. And very wide overnight POC. And 100% short, meaning that all of the trade that happened during the overnight was below zero. When the overnight inventory is short, the counteraction to overnight inventory is a rally. And we were talking about also how short this part of the session felt. Market selling but not, traders selling but not giving that much. And one important thing over the weekend was opening way below zero, somewhere down here, way below last, somewhere down here, or even I think was down here. But it just recovered right away. When markets do that, when the overnight, especially Monday, right, on Sunday, on Sunday, opens way below and rallies, has a huge rally or opens way above and breaks, That's a sign that it's not in this case it's not as weak as price advertised. And then it recovered it, get into the distribution, the heart of the distribution, and just trade sideways. This is the replay. What I want to do, I'm going to replay this. Something that also we were talking is about how, as important that these distributions were going to be, this one was going to play a role as well. If the market closed these distributions here, it could target its upside and even this high, right? Very important here, very important. But what the market was going to do, take care of the overnight inventory or the Friday short inventory, I don't know. Nobody knows what's going to happen. In hindsight, one can say, oh, okay, I knew that was going to happen, but that's not, that's just a fantasy. That's not real. Okay, I'm going to start playing this one, this day. Okay, this is the last period before the opening. This is the time. You can see 904. I'm playing at 30 times the speed. Okay, 30 times the speed. So to make it faster. Okay, what's going to happen here? What's happening here? I wasn't pressing the market actually. Okay, 14, 15, really fast. Let's make it faster. And then I'm going to slow it down. The market is trying to break here, then trying to go to the low side, 24, 24, 26, 27, that's too fast. Okay, 29. I'm going to make this slower now here because I want to see. Actually, I didn't see this play. Okay, that's the opening. All right. That's the opening. It opened right at zero. Right at zero. All of these trades from the overnight and nothing happened. It opened right at zero. There was all this last and all the traders that took the market lower now are underwater here. Okay. This is 12 times faster. Okay. Now this distribution here, I'm going to use red here. This distribution here and this distribution here. This is the upper distribution. This is the high or the lower distribution. Notice how the high of this distribution coincides with value very high. Technical traders, small traders use this for as a reference. It's not. I don't consider it as a valid reference. Oh, look at that! God damn it! Just didn't care about this. Granted, this 12 times faster, right? This is short covering here. As soon as this one is taken, do you see how fast it went? Let's see it closes. This is short covering here. Now, it's important to me that this to separate this distribution because I consider this as I take this as a separate days. This is one day, this is another day. Coming outside, this is market getting out of balance. Now it has entered. Oh my God! But this was really fast here. God, really fast. I was in real time. Now, when it enters this distribution, the target is the opposite side. Notice that there is no excess here on the opposite side. High volume, drying here. Well, let's see what happens. Oh. When the market has that kind of speed, usually there's emotional trading. That is, stops being hit, shorts getting desperate to get out of the market, and just hitting hidden close button. Yeah, this is too close. Yeah, this is really close. This high. Let's see. The market takes this high. Dries here some volume. I must see more volume up here. There is volume. There's some reds here. I have started to observe these volumes here from another perspective. From the intraday, I started to watch this one, what the market does around these high blocks of volume. Now, notice how now the market has come out of this distribution. You know, it went all the way kind of like to the center, a little bit higher actually, and came out. You know, this is not good. You know, this is not good because you don't want to come out. It's just, but it was just too fast. It was too fast. This is hard back here. It was bought once here. Did you see? Oh, gosh, that was too fast. Hard back. 45 minutes. Oh, 45 minutes. Half into the first period. Oh boy, this is not good. No, it's just too much for a market coming this way. You know, everything is a series of facts around the different circumstances. For a market that come out this far, coming back more than half is not the good. But okay, that's one thing. Another piece of information is you don't want, if you are long here, you don't want to come back inside this range, because if it does come back inside this range, the target is the opposite side of the range. Notice also, this is kind of tricky here, right? You have, this could be a counteraction to the overnight inventory here. Also, at the same time, if this is Friday, the whole thing is Friday, this has opened inside, right at the center of the range, almost. This is just another piece of information. It was bought from somewhere in here. Somewhere in here. But really active market, really a lot of, for 10, just 10 times 10 times the speed, that's a lot of movement this market has. I didn't watch the market live today, but I want to feel. What I try to do is, when I'm not present, I replay so I can kind of have a feeling of what happened. This is the second time it's coming back below hard back here. You know, the buyers are getting overpowered here. Now they are selling from hard back. No, it didn't come actually, right? It didn't come back to hard back here. They didn't sell. Was the selling came from this area. Now you are inside. You are inside the distribution. This is not good for the buyers. It's coming to sell. It came back all the way down to here to the opening. Let's see if it comes out of this distribution here. Selling from hard back, no good. It was repair. Okay, something else that I forgot to mention is this high here, you know, H high. It was the rally, or this rally was exactly to hard back. This is no good, and this one is just, yeah, come on, man. This is hard back, not how this is hard back. This was hard back also, but these weak levels were or have been repaired with this rally. All the shorts here are out now. Now what's next? All the shorts are out. What's next? These shorts are out as well. Now let's take what is going to happen with these guys. Here. only 10 times speed here. Wow, sellers have been taken back. The next thing, sellers same as POC. Next thing, overnight POC. And you don't want the market, if you are short now, yeah, you don't want, because the market re-entering this range, this distribution targets the opposite side. You don't want to come back, to come out of this range, you know. This is not good. Now it's good, not good. Oh man, this is super. Gosh, this level is not good, not good at all. God damn, look at this. You had 2 ticks of excess here relative to this day, but man, this is. This distribution has been taken, this one has been taken as well. Wow, there's a lot of whips over here. These trades were killed here. Going to the upside, the ones that didn't make the adjustment. And when you don't understand what's happening, you can get killed in these kind of markets. This is overnight inventory, 100% short. This day, this distribution is all selling market. Getting too short is a high risk. You know, the risk of being long is really high. This is assuming you have here my my update from yesterday. I consider this market extremely weak in the in the lower side as well. The weakness, the risk of being long is astronomical high here. This is another layer here, another layer of weakness the market is adding here. This low here. You have non-excess. Technically it's excess here, but this is just very mechanical. You have this one, it could be held back, pretty much held back. You can say it's held back as well. Notice how the volume dries here. And the market has come back to the center. Probably we have a high and we have a low at this moment in time. The market could trade sideways here. 5 wide here. This is unbelievable here. 5 wide here. Another distributions. And there's 3 distributions here. This one is also a nuance to me. I am still carrying this thing as a nuance. You know? This one, and this is the 3rd distribution. You know, if market targets this distribution, it comes here, it can go 1 tick in no time. You know, and actually can target this low that also has no excess on the lower side. Now we have no excess here, no excess up here. Look at this, man. No excess here. This is the intraday. This has low also remain. Now, like, I wanna go faster now. You know, being short here in this kind of, now, these distributions have been merged now. Now the odds of rotation are high now. If this low is not taken, having this kind of highs, non-excess highs, actually limit the damage that the market can do on the lower side. It is more relevant when it is something like this. But the market was just went too long and then too short, too fast here. Okay, we have an inside back here. It's not done yet. Just starting, 4 minutes into the first bit. Oh my god. Look at this high. God, this is nothing. This is super risky to be short here. Being short is the last thing I want to do here. And you can see these 3 highs all together. The same kind of movement that this market had to the upper side when it opened. that kind of movement can this market can have at this moment in time, or before the day is over, because of this matching highs here. Now I am playing 30 times the speed, the normal speed. Okay, I just don't have to. I don't wanna be too slow here. Half back here, very close to half back, coming from sailor. This is not good. Very mechanical trade. Oh, 4 times now. This kind of movements are quite usual. No, you got this kind. Technically, is good now. This level has been corrected, but to me, this is no good. It's kind of like a trap here. You got 1, 2, 3. It's only 4 ticks to the upside. And there is still a bunch of stops here. Probably the stops are above half back here, above a half back, somewhere in this area. Maybe even here, maybe. But this is no good. This is better though. This one has been repaired. It's better now. But no, this one I don't think that's that one. Alright. Very mechanical day. Another mechanical day here. Let's do it fast. There was quite a movement here. I am playing too fast. This is not a real. Usually I play like 5-10 times top, but 40 times a lot. Notice what's happening here. There's more stops here than high. More stops here. You have 1, 2, 3, 4 more stops in this area. Right? If this halfback is taken, that would be. Oh, look at that liquidation. Power here. This high can be taken if the market gains momentum to the upside here. Now 1, 2, 3, 4, 5, 6, 7 periods wide this profile. When periods get thicker, when the profile gets thicker and thicker, the odds, the chances that the market has an upside breakout, upside a rally or a break actually get diminished here. It's lower, more lower. Again, market's using saddle. Saddle happens to be also POC. But notice where this buying is coming here. It's coming from this area. POC and sell. Maybe the traders saw this rally. Okay, now we are going to buy. But POC is moving. Oosh, look at that. My God. Still more stops here. God, this tremendous amount of liquidation here. All of these longs here. All of these longs now are out. Could this market go higher now? Sometimes for the market to go higher, it needs to remove the weak longs. Oh, come on. Wait, notice what? Come on. From 4,200. This is not good. I know this one from February high. I mean, this could be coincidence, right? But too much coincidence. Oh no, this halfback from Friday. Coming from this is not good. God damn, 1, 2, 3, 4, 5, 6, 7. Notice how, in the same way as this on Friday, there was selling and the market wasn't moving much. The same thing is happening now, but this time to the upside. They are buying here, but the market cannot move higher. Again, this is not good now. Hard back here. This level is not good. The longs are trying to push the market higher here, but they just can't. They don't have enough power now. Okay, still These shots are getting nervous here. Oh, wait a bit. I didn't see the spike here. Okay. Okay, now these shots are being removed now. Huh. Look at that. But the loans can come on. They just can. Now has re-entered this distribution. Okay, let's go for the high now. Let's go for this one. What? No, this low is not good here. Still, this is the option to the upside is 1, 2, 3, 4 periods going to the upside. L, it's too late. I don't think they are going to make it now. This is not good. Taking this one starts a new action to the downside. This is not good. No good, no good. Could be some liquidation here at the closing. Okay, this one's out. Let's see if the market takes this one out as well. Or if the market repairs these lows. Okay, seems like it's going to do it. Oh my god. Now selling is coming from Halbach again. This time POC. This is not good. Wow, I can't believe this POC. Don't tell me it's going to end like this. Rotational market here. How much time left? 4 minutes, 3 minutes, 1 minute, no. Huh. This one is not good. Okay, this level here is very mechanical here. This one here. Wow, it happens to be POC. This level has good also been revisited. That's why I'm leaving a gray. I am setting a gray mark there. Oh man, can you see what happened in Chi here? That's the reason why I had this big, huge short covering rally, short covering period here to the outside. It was taking all the shorts from this period. Very mechanical sell. So exactly from previous day Halbach. Oh, the sell. The lower side, you have this weakness, this weak 42.25, where it is 102. This one in the lower side, this is a weak level in the upper side. And this is the overnight now. Oh, value now is higher. Value is higher, but the trend to the upside has ended. He technically has ended. In the same way, this is a trend, right? Where in the intraday you have one period going to the upside, next one going to the upside, and this one ends that in the intraday. Notice how at the opening we have this one, one to the downside, two to the downside. This one could be considered to the downside as well. It doesn't have, but this period here ends the trend to the downside. this one here. So this could be, maybe this is not an inside, but you know, very a lot of rotation here. In the same way how this trend to the upside ends with this one, this day, you check the daily time frame, we have 1, 2, 1, 2, 3 days to the upside. This one is ending the trend to the upside. This day. You can also consider this. If I am going to count this as an upper distribution and this one as a lower distribution, I consider this one actually ended the upside trend, right? But that's too much. That would be looking too deep. Now the upside, this one is no good. This high is no good. It couldn't reach it, but it's still there. We have overnight high, or the market high made in the overnight. Weakness in the upper side. Non-excess in the lower side. If you put these two together, okay, if you combine, well, I don't know how to combine this. Let's see if I can remove that. This here. I'm going to combine these two. Yes. Now it's using it's imagine the overnight as well here. I want to show you that the low, in the same way that this high doesn't have excess on the upper side, this one doesn't have excess in the lower side as well. There's no excess here in the lower side. So today, what do we have today? Today, Tuesday. PMI composite flash 945. Manufacturing, Lori Logan speaks at 9. And tomorrow FOMC. Okay. Notice also this is a balance. You have 2 day balance here. Let's check what the let me close this thing. I'll close that thing. Let's check the monthly, weekly. Oh, before that, look at the volume here. Today's volume was way lower than Friday. Very low volume here. You know, prices are high, and volume just dry. There's no volume there. Right? Can you see here? No volume here. No big blocks in the, a lot of congestion, no big blocks here, no big blocks in the over after the period, after the session closed. Can you see there's nothing here? There's nothing here as well. It seems like bigger time frame trading money has left the market now. Something that is catching my attention here is the bond market. Now notice how the 10 and the 30 are actually breaking. There's nothing here. It's very quiet. This market is, the ES is very high, quite high, and it seems like it's not paying attention to this level, to this market. But if this market keeps going lower, eventually this market will need to catch up with these bonds, or this one are going to come back to this to catch this one with the ES. Notice also, remember, Nasdaq has a very different chart than ES, and on the Dow. Gold, and there's some liquidation here, crude oil is in range, and dollar, you know, dollar is rising, still not even close to this high here. Dollar rising, bonds falling are not a good combination for the ES. Also, one of these two is will need to will have to meet the other one. Now, the monthly, we still have this 2-month range here. This is the still have like 7 more days of 7 natural days, kind of like a little bit more than a week of business days, trading days. And if this bar can end as an outside bar, it can have a different meaning than if the market closes inside this bar. Okay, market closes above or outside is an outside bar here because market explores the lower side and closes above. But if it comes back inside, it could target this low action, this low here. In the upper side we have the 4300 and this level here. The lower side feasting feels this low, and then this one. Remember, the ceiling depth talks could bring a lot of volatility to the market. This was the trade. I still have this range inside bar trade, breakout of the range, and now the upper side doesn't have access here. This high is very close to this side. There's no access in the upper side of the current wick here. There are good odds that this high is going to be taken. Notice how the market is going higher here in the weekly. This you have a low here, higher as well. The wick is just starting. We still have a lot to go, a lot time to go. The market can go higher here, or it can. As long as this low remains, the trade remains to the upside. But I don't want to see, I don't want to see the market coming back inside this range, and that will be a sign of troubles in the weekly. Notice how this is a big range here between the, market trading range since, in this case, we have a big range, but the range is compressing here. And it's becoming narrower. The daily, notice how this is impressive here. The weakness in the lower side. You got this one. Two low here, 3 low here, another 3 low here, matching 3 lows here, 2 lows here, one coming from exactly 50 previous day high, 100, 200 and 3900 here. I remember this contract, the previous contract, also had a lot of the same kind of weakness that we are witnessing here going to the upside. It had the previous contract but going to the lower side, and the market get extremely short, but with very weak money, very weak trading here, and you can see how the market got too short, and this just got crushed in this as soon as the new contract started here. This is when the new contract came online here. I started getting volume March 10th, and we have 2 maybe 3 more weeks to go with this June contract. The weakness in the lower side is impressive. It's scary. Now a deeper look, we have these lows here, non-access here in the upper side, weak matching. This is 2 distributions, right? This low matches this distribution. This is the 5 white, non-access here, 2 white here, three white here, another one down here. FOMC one thing at a time. FOMC can take care of this range here. The market can either repair this high or take care of this with lows here, or it can be a whipsaw as well. And a sequential trade, maybe taking care of the upside first and then coming back to the downside, or maybe taking the downside and then taking the upside. If the market trades sideways here, it just adds more balance to the already 2-day balance here. Well, the risk of being long in this market is impressive. You have to be very, very careful being long here. The idea of trading without stops is, you know, you don't dare to trade without stops. You know, you have to be, your stop has to be there as soon as you put your trade, if you are going to the upside. The trade, the thing is, the trade is to the upside, right? We got value here, breakout, value higher, value higher, value higher, value higher. Value keeps going higher. POC yesterday moved higher. Was here originally, but it moved higher. It ended higher here. The distribution, notice how this distribution have not been closed here. It still has not been closed. It's early, too early in the morning. This distribution is one tick from being closed. Sometimes the markets do this kind of things, kind of like hidden. This is a very mechanical law, you know. But I don't consider this the overnight as too much relevant. But for me right now, this overnight is 100% long here, right? Very long. Settle is down here, and all the trade happened in above settle. This is short covering here. You got some short covering up here, sideways trading, and this is liquidating this you know, the trades that just got in here. Now the distribution have been closed. This last tick closed the distribution. This is not good anymore. Alright, very evenly distributed profile excess. This is the trick part in markets. Now you have good excess in the lower side, really good excess in the lower side, single prints in the lower side, single prints in the upper side, right? But this one, if relative to yesterday, it has no excess here. And this one, of course, no excess, because we can see it down here. All right. I hope I can make a market update today before the opening. But as of 12:55, if the overnight session of the market gets close to the opening and is inside yesterday's range, they're also having a rotational market or chop at the opening to start with, are high, are going to be high, and because it will be opening inside, the closer the market opens to the center, the higher they also chop, and also the higher they also having a rotational market. Alright, I hope you guys have a good trading day. I hope I can see you later today as well. Alright, see you. Bye bye.